All right, if you watch this video from its entirety, from beginning to end, you're going to pick up a lot of tips that are going to help you in your trading daily when it comes to the futures, whether it's the NASDAQ, the ES, like the S&P 500, gold, any means of a future market or contract that you have interest in actually trading. This will help you out, especially if you're a beginner that's starting off. Very easily you can make $500 or $500 a day if you really know what you're looking at. All right, so first and foremost, always talk about structure. It is essential to determine which way the market is trending. Okay, yes, we have been broken 12-month lows since December. I talked about that in a video or two ago, but again, watch this video in its entirety because I'm about to walk you through a simple strategy, one of the easiest that I've been using that works for me each and every day. But first, it doesn't really matter what type of charts you use, whether they're time, tick, volume, or range. I trade based on range-based charts. As you can see here, I'm using 120 as my higher base chart to determine a bias, pretty much, the direction of the overall market. Volume is important, of course. But let me say this, when there's news events or economic news, find yourself a calendar. You can use forexfactory.com. You want to be mindful to not trade around high impact or mid impact or medium impact news events. Okay, I want to say that. So first and foremost, what I do each and every day when I'm looking at the market, okay, I am looking to see what did it do the day before, pretty much. All right, so I'm looking at yesterday's trading session, and what I see is that yes, we were. Let me go back because there was a lot of activity yesterday. Yesterday was the 7th. Is that correct? Yeah, 7th of April. We started making higher highs and higher lows to the upside, making, basically breaking structure higher. So we got a shift in the market direction. Then the market pulled back. We shifted it down here, got a bearish pullback down, and then it starts to about 11 o'clock, somewhere 10:45, 11 o'clock, the market started to push back up to the upside. All right, so we have this big area of structure that's being created off of this retracement yesterday morning, and then into the into the afternoon session, we started pushing back to the upside. Now, into today's trading session, basically looking at the Asian into the London session, you can see we were making these higher highs and higher lows since 10:45 yesterday. So we are bullish at this point. Now, we didn't take out the major area of structure breaking above yesterday's I don't know if that's yesterday's high or not. Let me make sure. Yesterday's high right here at 18,360. We got up there today right about 354 but didn't break it. If we did, that would have been a major high. So yesterday's trading session high was right here. That's a major high resting right there. We approached it but never broke through it, and after that we just started pushing back to the downside. So the market likes to move in waves, and it likes to rally and then retrace, rally and then retrace. But since, again, like December of just this past year, we have been pushing to the downside. If you really go and take a look, and I'll pull it up right quick just to show you at this is a daily chart. Okay, if you take a look here, you'll see this was the market. Well, not even April last year because it's only going through May. But even through April, I can assure you, which is going to be over here in this blank space, I have to load some more data. We're breaking through lows. This is December, around December 15th, 16th. You can see we're taking lows out here, here, and below here. So we have pushed through all these lows from last year, almost a year going back. And this is what the market's been doing since December. So, yep, there's been a major sell-off in the market, which is taking place. But the way I trade, I stay away from the economic news events that are on the calendar, but I'm trading based on what I see and what's going on. So, when the market approached yesterday's high and couldn't break through to take that major area structure out, all I'm doing then is just looking to see, okay, if we start to turn the other direction and start to break structure to the downside, and the way I like to look at the market is if it's going to break structure, it has to make this kind of pattern. If it's moving to the upside, it has to start doing something like this to the downside, where it's making lower lows and lower highs, and then, to the downside like that, okay? But I want to see where it's like, breaking through areas of structure as it's coming down. So let's say the market did something like this. So this right here would be the high right here, and then it starts to make a low, lower high, making a lower high, breaking below an area structure. So this would be the shift from where it went from bullish back to bearish. So hopefully that makes sense. Just want to show that right quick. So today, when I saw the market making this top right here around about 1025 today, it started to then make its first descent to the downside, making a low, lower high. Okay, coming to the downside, low, lower high, and pushing lower. But as it was doing that, it was taking out, areas of structure coming lower. So when you see things like that, and that means there's a reversal that's happening within the market. I want to say that right now, okay? And then from there, you can see we're just making lows, lower highs, lows, lower highs, lows, pulling back here. It did break above this high here, but then we made a new low, okay? A new lower high. New low, new low. So as long as it's doing that, you should only be looking for pullbacks to key areas of supply. And you can see since then the market has been pushing to the downside very, very, very hard. The remaining portion of the day, not any rebound at all when the market started pushing back to the upside. So, but since the market opened up this morning, I say prior to the market opening up, pre-market, some of the best opportunities to look for trades. Okay, so when the market was making higher highs and higher lows, pushing higher. Like right here, this was an opportunity to actually go long. There was a nice area of demand right here where the market pulled back, pushed higher. So I first mark off an area of demand if we are bullish to the upside. If we're making higher highs and higher lows off the higher base chart, then I'm going to mark off my highest base chart at an area of demand. Okay. Again, if we're bullish, demand. If we're bearish, I'm only looking for areas of supply on a retracement. So this is a area where there's demand on the higher base 120 chart, 120 range, and there's also a gap earnings balance resting back at the zone. Now, if you are somebody who's been following the channel for a while, you know what I mean when I speak on the imbalance. Okay, so that's what I want to see. I want to see a breaker structure. I want to see where the market has a nice area of demand, okay, aggressive buying, and with it's a gap resting back at the zone, imbalance resting back at the zone. So the market got here, that first blue box you see there, that's the 120 range demand zone markup. If I go down to my 60 range chart, let's find that location right here. Here it is right here. That magenta box, that is the 60 range demand zone. So I'm looking for, again, multi-chart confluence where we have a higher base zone, and then which is the 120 zone, and then a lower base zone. So whatever chart you use for from a entry chart, that's the zone that you want to mark up on the lower base chart. So it's higher base zone first, mark up, and then lower base zone. So just to give a breakdown, I want to say this: whatever which way the market's trending, if we're bullish, demand, okay? So I mark up my 120 range at an area of demand on the highest base chart, okay? And then I want to move down to a lower base chart to find a zone on the inside. So giving you confluence in this area here. But again, just as well, if you look over here, we have 18,100, okay, which is also a round number. So those multi-means of confluence resting right here. When the market reaches both zones and reacts, it goes to the upside. Just that simple, okay? So from there, we'll go back to the higher base chart because that was one setup right there. It broke structure above these highs, came back, got the reaction there. It pushed up, and then it pulled back, and then it started making, these little runs to the upside here. There was another demand zone resting right here. There's a breaker structure above this high right here. Came back, tapped that zone right there. You could have scaled down to, a 60 or even a 24 range chart to look for an entry point, meaning a zone on the inside of this zone right here. Okay, meaning the higher base zone. And then you can look for reaction and take a quick scalp, right? So then the market pulls back right here. More aggressive buying to the upside. I marked these areas right here on the, these were marked. The magenta box right here, this one here, this one here, this one here. These were areas in which I took trades from. All three of these are off of the 60 range, so we'll go to those right now. Because on the 60 range, you see here, we're bullish on the 120, okay? As long as we're bullish on the 120, I can look for opportunities off of a lower base chart if I don't, am unable to find or locate or mark off a higher base like 120 range demand zone, right? But even though this right here is, a bit of demand right here, if I look at the 60 range, let's go to it right quick. Let's blow it up. You can see that this is a breaker structure on the 60 range chart, this being the area of demand. Now, this was a low probability demand zone on the 60, but it was a high probability setup on the 24 range. Let me go over to that area right quick. And let's see where we're at. Have to kind of scroll back a little far. Here we are right here. So, all right. So remember what I said, mark up one chart, whatever chart you use, maybe from a higher base chart standpoint. So I already saw that we were bullish on the 120. I scaled down to the 60 to find a zone, okay, which is that pink zone. This is a demand zone. And then I moved down to the 24 range to find a zone within that zone, okay. So that is the 60 range demand zone. Now on my entry chart, my 24 range, it taps the high probability demand zone on the 24 range chart and reacts from there. And that's all I'm looking for. So just basically marking up two sets of charts, or not say two sets, but two charts, a pair pretty much. It could be the 120 and 60, it could be 60 and 24, it could be the 120. It's whatever you can, find these zones that are going to give you confluence within. So most times I like to look at a 120. If I can find a 24 range zone, it'd be good. But like right here, I know we're bullish to the upside, so I could scale down even further or move down one chart and move down to the 60 and find me, okay, this was a breaker structure here. We do have a demand zone. It's low probability, but do we have a demand zone on the 24 when I scale down to my entry chart? That's high probability. Yes, this one right here, okay? So that's why that was a valid zone to take a trade from. And then right here, for example, it was another setup right here. This was so right here, we're still bullish when even over here, we pushed up, made a high here. We have these highs, pulls back, wicks out right above, the most recent highs here. So if we scale down to the 60 range, you can see what we have. A push up, market comes down. All right. We then have a demand zone that it makes because it pushes to the upside and we break above these highs here. So this is a demand zone right here, okay? Simply put, on the 60 range. Mark it up, then just scale down to your lower base chart. Say for me, I'm using the 24 range chart, and then I'm going to find a smaller zone that rests on the inside, both of them being demand. A markup on, your first markup is from wherever you find the structural break to the upside, or it could be the downside, but being that we have broken to the upside, it would be demand. Mark the higher base chart first, and then move down to your lower base chart to mark up your lower base demand zone. So as long as you have that confluence there, off of two charts, most times you're going to get a nice, beautiful setup to where you can go back trading long. Also, in this case here, it's approaching close to a round number, 18,300. More confluence right there. And so that's pretty much all you need to do each and every day is just, looking for confluence, because I always talk about the more confluence you have on your side, that the trade is going to work more so in your favor, as long as you are understanding structure and you're taking the trades with the direction of the market. Like right now, and looking at what was going on today, I would have only been interested in looking for trades going long. Why? Because the market was just completely bullish to the upside up until around this time frame of 1025, 1030, and then it starts to push lower right here. This is how I trade the future markets every day. Just following structure, looking at price action when I'm into a trade, and determining how far I can take the trade to. So that's why if you're interested in becoming an elite channel supporter, what I do there is I have a series of videos, okay? I mean, tons of them already, where these are trade breakdowns, to where I break down entries of trades that I post over on our Discord community. And maybe if someone that's interested in joining the Discord, it's free. The link is down in the description portion of the video. But you can also become an elite channel supporter or member for only $6.99 a month. That's why I walk you through, as if you're sitting right next to me, or virtually, these trade setups, the ones that I post over in the Discord, because it's helped so many people who are part of the Discord. Some have learned the strategy and moved on, and some are still with us. But by breaking down the trades helps you clearly understand the strategy, but also it helps you understand different types of setups that may occur, that you may see from time to time, because the market's always doing something different. We have to understand that the conditions are changing. But I go through structure and talk about why I took the trade, okay? Which way the market was moving, because you always want to be taking trades in the direction which the market is actually trending. If you're not, then you're counter trend trading. Okay, and there's nothing wrong with doing that, but you must understand counter trend trades have a lower success rate than taking trades that are of high probability and they move with the trend. And understand that. All right. So with that, becoming an elite channel supporter, you receive the trade breakdown videos. Talk about structure, talk about why I took the trades, stop loss placement, profit target areas, just giving you the full on rundown of what I was looking for, or why I took the trade. But you also receive the video playlist and a great video covering structure of the market, or market structure, for anyone that's still struggling with that concept. So, you know, if you want to become an elite channel supporter, again, it's only $6.99 a month. That's like 24 to 25 cents a day. That's all it is. Pennies on the dollar a day. You know, that could be game changing for anyone that's looking for a strategy, especially as a beginner that is, you know, just trying to get their bearings and find a way to get into and start trading the future markets. All right. Here's a way that in which you can make, like I said, $500 additional a day. Even if you say, hey, I want to keep my full-time job, I want to take one scalp trade a day and, make some extra earned income, right? Here's a way to do it. All right. But that's all. Outside of that, that's all I want to share. And, I make video content like this on a daily basis, covering the strategy, because it is what's important. Okay. Of course, the concepts just as well of market structure, grasping that, and you need to master that, because if you do not master market structure, you're going to be struggling as a trader. I promise you that when I say this. Okay. That's all I have, guys. I really appreciate it. If you're not a current subscriber, please take the time to sub by clicking the subscribe button down below. Also, click the bell to make sure that you do not miss any of the uploaded content that I post pretty much on a daily basis. That's the post notification, okay? That bell is. But last but not least, I know there are tons of people who follow this channel. Please, guys, do me the biggest favor. Right now, before you click off of here, click the thumbs up button or the like button. I would greatly appreciate it. I know we have a lot of Discord members, so I would appreciate it if each one of you could go ahead and click that like button. It helps the video content get out to where it's needed, because I want to see people, grasp this information, understand it, and hopefully it works for them. Make sure you back test and forward test the strategy, so that, because I know that everything works for everybody, and some people don't see things the same way as others. But I assure you, strategies work if you put the time and effort in to really back test and forward testing them. Okay? Take care. See you in the next one.